A seismic shift in U.S. tech policy just hit Washington, sending shockwaves through both the political and technology sectors. President Donald Trump has made a headline-grabbing decision. He's now allowing Nvidia to sell its powerful H200 AI chips to China. This move marks a dramatic reversal from the strict export restrictions that had been in place, and it's already sparking intense debate across the globe. For years, the U.S. government worked to limit China's access to advanced semiconductors, aiming to slow Beijing's military modernization and preserve America's technological edge. These policies were seen as crucial to maintaining national security and keeping sensitive technology out of rival hands. Now, that long-standing strategy has been upended overnight, leaving many in Washington and Silicon Valley scrambling to adjust to the new reality. The Commerce Department, under Secretary Howard Lutnick, is now tasked with implementing this new, more permissive export policy. Their challenge: balancing economic interests with national security concerns, all while under intense public scrutiny. The Nvidia H200 chip, while not the company's absolute latest, remains a formidable piece of hardware. It's widely used in American data centers for advanced AI applications, powering everything from scientific research to next-generation business analytics. Granting Chinese companies access to this technology is a significant concession. It's a move that has drawn both sharp criticism from national security hawks and quiet approval from business leaders eager for new markets and profits. The established playbook for U.S. China tech relations has just been thrown out the window, leaving policymakers and industry insiders alike to wonder what comes next. Lawmakers are scrambling to understand the reasoning behind this abrupt pivot. Many are questioning why an administration that has long been tough on China would suddenly open the door to such critical technology, and what the long-term consequences might be. The fallout from this decision will dominate policy discussions for months to come, as experts, politicians, and industry leaders debate whether this bold gamble will pay off or backfire in ways no one yet expects. This decision marks a major twist in the long and complex saga of U.S. China tech competition, a rivalry that has shaped the global technology landscape for years. For years, both the Trump and Biden administrations have relied on export controls to block China's access to advanced chips, specifically targeting major Chinese tech companies like Huawei. These measures were not just about business. They were about national security, economic power, and the future of innovation.
The goal was clear: to sever China's access to cutting-edge American technology, which the U.S. government viewed as vital for China's military modernization and surveillance capabilities. By restricting these technologies, the U.S. hoped to slow China's progress in critical sectors.
President Biden expanded these controls even further, aiming to cut China off from high-end chips worldwide if any U.S. technology was involved in their production. This move sent shockwaves through the global semiconductor industry.
This was a clear escalation in the tech Cold War, designed to kneecap China's progress in artificial intelligence, supercomputing, and other emerging fields. The world watched as the two superpowers locked horns over the future of technology.
U.S. companies like Nvidia responded by designing less powerful, export-compliant chips for the Chinese market, trying to balance lucrative business opportunities with the demands of national security. This delicate dance became a hallmark of the industry. The overarching U.S. strategy was one of containment: maintain a generational lead in semiconductors and advanced computing to preserve American technological superiority and global influence.
This week's decision to allow H200 sales directly challenges that strategy, raising questions about how the U.S. will balance innovation, security, and economic interests going forward. It signals a new and untested approach in the White House, one that could reshape the next chapter of the tech rivalry. The stakes have never been higher, and the world is watching to see what happens next.
To grasp the impact, you need to know what the Nvidia H200 chip is. It's a specialized GPU, optimized for the massive computations required in AI and high-performance computing.
These chips power large language models, scientific research, and the systems reshaping our world.
While not Nvidia's latest, the H200 is still a powerhouse, actively used in top data centers.
Demand for these chips is astronomical, driven by the global AI boom.
The H200's ability to process huge amounts of data quickly makes it a critical national asset.
For China, access to the H200 is a top priority, and U.S. export controls have been a major roadblock.
Allowing China to buy these chips could accelerate their AI development and close the performance gap with the West. This is more than a business deal. It's a strategic decision with global consequences. The decision sparked immediate opposition from Representative John Moulinier, chair of the House Select Committee on China. He sent a formal letter to Commerce Secretary Lutnick demanding a full briefing and justification. Moulinier argues that aggregate computing power is what matters in the AI race, and selling H200 chips helps China build a bigger, faster engine. He wants to see the data, risk assessments, and intelligence behind the decision. As chair, Moulinier is putting the administration on notice. Congress won't stand by as national security policy is dismantled. His alarm highlights deep divides, even within the Republican Party. Critics argue this move risks long-term security for short-term gains. The battle lines are drawn, and the administration must now justify its reversal. A major concern is China's tech giant Huawei.
Reports suggest Trump's decision was influenced by claims of rapid progress in Huawei's AI chips, raising doubts about the effectiveness of U.S. controls.
Moulinier counters that Huawei's advances relied on illegally obtained technology, not true domestic breakthroughs.
He argues that U.S. controls were working. Huawei's next chips, made with only Chinese tech, are expected to be a step backward.
Relaxing controls now, he warns, would give China a lifeline just as its efforts are faltering.
The debate centers on whether China is truly catching up or just finding ways around restrictions.
If controls were working, this policy shift could erase hard-won advantages.
So why the sudden change? The administration hasn't said much, but several theories are circulating.
One is economic. U.S. tech companies, including Nvidia, argue that losing access to China hurts their bottom line and future innovation.
If U.S. firms can't sell to China, it could accelerate China's push for self-sufficiency, creating a rival industry.
Selling slightly older chips keeps China reliant on U.S. tech and generates profits, while reserving the most advanced chips for America.
Another theory is geopolitical. Offering a tech concession could create leverage in broader negotiations with China.
Technology becomes a tool of diplomacy, not just a weapon.
Or perhaps the administration believes China's chip capabilities are advancing so fast that controls are becoming moot.
If China will soon match the H200 anyway, the logic is to profit now and stay one step ahead.
It's a high-risk, high-reward strategy, betting on continued U.S. innovation. The stakes couldn't be higher.
The U.S. must hold the line, even at economic cost, to preserve its technological edge. For many policymakers and security experts, the stakes are simply too high to risk losing ground in the global tech race. They believe that maintaining strict controls is essential to protect American innovation and keep critical technologies out of the hands of potential adversaries. The choice is stark: profit now or protect the future. On one side, there's the lure of immediate financial gain, with billions of dollars at stake for American companies. On the other, there's the long-term risk of empowering a rival nation that could one day surpass the U.S. in key technological fields. For them, national security outweighs short-term profits. They argue that once advanced chips are sold, there's no turning back. The technology can be used in ways that threaten U.S. interests, both at home and abroad. It signals weakness and encourages China to keep seeking U.S. tech by any means. Critics worry that relaxing restrictions could set a precedent, making it harder to enforce future controls and emboldening competitors. Opponents say the previous controls were working. Relaxing them now is a mistake. They point to recent successes in slowing China's tech ambitions as proof that tough measures are effective. They argue the chips will boost China's military and surveillance capabilities, threatening U.S. security. Advanced semiconductors could be used in everything from artificial intelligence to next-generation weapons systems. Critics, led by national security hawks, warn this is a dangerous giveaway to a strategic adversary. They fear that once the technology is out, it can't be contained or controlled. But supporters of the sale argue that selling to China maintains influence and market intelligence, rather than pushing China to become a fully independent rival. By staying engaged, the U.S. can monitor developments and shape the global tech landscape. They argue that technology will always find a way around barriers, so it's better for the US to set the terms and profit. If America steps back, others may fill the gap, and the US could lose both revenue and leverage. Supporters say the US can't afford to decouple from China. The revenue funds future innovation. They believe that continued engagement is vital for maintaining America's leadership in research and development and for supporting jobs at home. The debate is fierce, with strong arguments on both sides, as policymakers weigh the risks and rewards. The outcome will shape not just the future of technology, but the balance of power between two global giants. This policy shift strikes at the heart of America's tech leadership.
For decades, the US has led in advanced microchips, a pillar of economic and military power.
The question, does selling high-performance chips to China strengthen or weaken that leadership?
The Pentagon warns that China's military-civil fusion blurs the line between commercial and military tech.
Chips sold to Chinese firms today could power tomorrow's autonomous weapons or surveillance systems.
Beyond military concerns, there's a battle over the future of global tech governance, democracy versus digital authoritarianism.
Critics fear empowering China's AI could help export its surveillance model worldwide.
The Trump administration is betting on a transactional approach, but the consequences will be lasting. The world is watching to see if this is strategic genius or a critical blunder.
For Americans, this isn't just a tech story. It's about jobs, security, and the nation's future. The outcome of the AI race will shape global power for generations. The decision to sell H200 chips to China is a high-stakes experiment. Will it preserve US leadership or empower its greatest rival? The coming months will reveal the answer. The world and America's future hangs in the balance. US allies may rethink their own export policies, potentially fracturing the united front against China. Meanwhile, Nvidia and other US firms will rush to fill Chinese orders, while markets react to the new reality. Expect heated hearings and intense scrutiny of the intelligence and economics behind the decision. The next chapter will be shaped by Congress's response and the administration's justification.